big topic today.
Yes.
Coming on the heels of like a very awesome weekend in Napa. We went to California for 4 days, and I was just saying this to you, and I'm going to say it on air to make it like 100% clear. We've done 2 trips this year. Like we're so lucky to have done that. And one was like very relaxing. Like we are going to stay off our phones the whole time. Like no work.
It was like try to limit work as much as possible.
Like left the phone in the hotel room, and they were just like little weekends away. And then this weekend we actually went away to work. We were like, we have to, because we have like we've got the 3 kids, 2 dogs, busy life, like all this stuff that we're doing. And we're like always getting pulled in a million directions. So we're like, let's go away and plan like 2024 and like get some stuff coordinated for next year and big goals. And so we went away to work, and I swear to God, I feel more relaxed and like rejuvenated after this last weekend. And you know me, I'm not like a workaholic.
Right.
But I'm sure a lot of people can relate to this. Consciously being away from work, there's this sense of dread when you have to go back to it, that you're like, oh God, how much do I have to catch up on? Or like, what fires do I have to put out? And when you're just like working and going to wine tastings, everything seems great.
Well, and when you say everything seems great, like everybody on the outside just seeing Instagram, like hitting me up like, oh, you're just gallivanting across the Napa Valley, right? Like everybody was like, oh, a work trip, right?
That's what yours said. But remember my TikTok?
Yes, I do. How could I forget?
I made this like totally facetious TikTok about like fun Napa weekend with mortgage broker husband. And I got like all these clips of Jack on the phone. It was so funny. And I got like trolled on TikTok by people who are like, I would rip that phone out of his hand, or like, you're so patient.
Or somebody, we sent somebody back to their childhood.
Yeah.
They were like, my parents did that, and it like affected their child. I was like, sorry, we triggered you.
Our kids aren't here with us, number one. And number 2, his clients are my clients.
Right.
He better, like, I'm fine with him on the phone.
I loved the one that was like, I would never want my mortgage broker to like call me like that, and then you responded with like, he's not calling them.
He's just answering the call.
They're calling him.
But at least he was like humble about it. He didn't try to like fight with me like some like Reddit user. He was like, oh yeah, good point.
But admittedly, those calls are like my favorite thing. I was born to do this. I love talking. I love about the VA loan, about educating people about it. So
oh my God, perfect segue.
Oh, well, yeah.
Literally today is just you talking about the VA loan.
I know. Oh my gosh.
Which is like, you know what, guys? We really just put Jack in his element today.
I know.
And I love it.
Well, it's funny because even before I was a mortgage broker, I would talk people's ear off about investing in real estate and all the things that I've learned just through trying to educate myself. And, it was a good pivot into something that we're really passionate about.
Well, and it's funny because you pivoted me first.
I did.
Because your hands were tied. You were like active duty military. Couldn't like really do like anything professionally with real estate. Personally, sure. But so you're like, Courtney, get your license. Get your license. And so I did. And now I'm glad
we
that you
keep alley-ooping each other.
Yeah.
It's like alley-oop to Courtney, double alley-oop to Jack. So
I posted about I'm just like talking about my social media. I posted about the shirts because they ended up being, if you guys are watching.
Oh yes, the shirts. Can they see it?
If you're watching, Jack is in a Westford Homes branded t-shirt, and it's like literally the army green t-shirt you wear under
that was bad.
Your uniforms. I felt so stupid. But I had so many people comment that were like, it's so cute you guys are working together. I love this, and I'm happy about it too. So
yes.
Anyway, the VA loan. So I really wanted to do this episode like right up front because number 1, I have the expert of the VA loan sitting across from me. And number 2, as a real estate agent, I talk to so many people, military families that have been in 2 years, that have been in 20 years, that still don't have the facts. And there is plenty of information out there from like a million different sites and places that is totally accurate. But where people get their most information is from like friends and family, and they oftentimes don't have the right information. So let this be the landing place for everything you need to know about the VA loan and why it's such a advantageous investment tool, even though it's not necessarily supposed to be, and completely underutilized in my opinion. Mm-hmm. Do you agree with that?
I do. Yeah. Well, and I think the underutilization stems almost fully from just not understanding and getting educated on what the benefits are and how to actually dive in and use it. Most people, you talk to them, a year after they didn't buy, and they go, oh, well, we just didn't do it because we thought insert reason, right? Like we thought we couldn't use it more than once. We didn't think we would qualify because we have low credit scores. A lot of those things are not true, and we'll go through almost everything, right? But we're going to try to debunk some of those normal myths that we've heard a lot of.
Yes.
But we're also going to dive a little deeper into things that even if you do know a lot about the VA loan, you'll still learn from this podcast and hopefully teach you something along the way.
When we bought our first house in Kansas, what percentage understanding of the VA loan do you think you had at that time? And we were 22 and 23?
Yeah, well, I had just turned 24. I think we had very little understanding. I'm not even sure if we went in knowing that was something we had access to. We just said, hey, we're going to buy a house. And then we found out it could be zero money down. Looking back, we had very, very little understanding.
We did. We just jumped in though.
Right. So
we didn't want to throw away money renting anymore.
Correct. And, some of the mistakes we made there is we just went to our local credit union and got a loan.
I have like a rapid fire Jack FAQ, and that's going to be part of it.
All right. You go ahead. We coordinate ahead of time and do all these things. This is all planned.
No, it's for later on. So let's go through
okay.
We're going to walk this back and literally back to basics.
Okay.
Beginner, VA loan 101.
Okay.
What is the VA loan?
Yes.
And number one, how do I get the VA loan?
Okay.
Why do I get to have one? Why does someone qualify for one?
Yeah.
Not me personally. I don't get one, but a person.
You're a beneficiary. So the VA loan specifically, number one thing is a lot of people think that the VA loan is actually a loan from the VA. That's the number one thing that is not accurate. The VA loan is a guarantee to the lender that you're working with that if you foreclose or you don't pay your bills, that the VA will actually cover the lender and make sure that it's not a total loss for the lender.
So just for I'm walking this back further.
Yeah.
What is the VA?
Okay, the Veterans Affairs, right? Departments of Veterans Affairs.
Okay.
They are the ones that are supplying the actual guarantee.
Okay.
So when you go to a lender, the biggest thing is what is your rate, right? And the higher risk your loan is to the lender, the higher your rate. So if the VA is going to say, hey, we guarantee a certain dollar value to make sure that if this person does foreclose on this house, the lender is going to be covered by the VA, then that lowers the risk for the lender, which is a benefit for the borrower because that lowers your interest rate.
Okay. So to back brief you, you like that?
So corny.
I think it's a great term, but I could go to USAA or Navy Federal and they will give me a VA loan, but I could also go to Hawaii State Federal Credit Union.
Correct.
And get a VA loan.
Any lender, within reason. There's some lenders that don't offer the VA loans, but most lenders that you've heard of, or really any that you would reach out to, are going to offer the VA loan, especially in Hawaii because it's so used in Hawaii.
Okay. Okay. So the VA loan is backed by the VA, but can be given to you by any lender.
Correct.
This is my immediate off the front plug of why you should use a mortgage broker.
Sure.
Like you.
Yes.
Instead of there's I always put them into 3 buckets. I could be doing this wrong, so maybe correct me, but there's direct lenders, retail lenders, mortgage brokers. Can you go through what the difference of those are?
Yeah. So retail and, direct lenders, kind of the same. So one, you're going straight to a bank and you're saying, hey, can I get a loan from you? So they're providing, they oftentimes have multiple loan programs, but if you're looking at a 30-year fixed VA loan, they're offering you one option, right? This is the rate. This is what we're going to do. And oftentimes I've seen they don't even provide options within the rates, which they all have access to those options, but many times the loan officers are just, hey, this is where we're at. This is going to be the closing cost. Here's you don't have any options. With a mortgage broker, we have plenty of options. So I have access to too many to count lenders, over 80 of the nation's top lenders, to be able to provide, hey, here's a competitive, we present the credit profile for the borrower, and then all of those lenders actually compete. And I have a system that I can actually put your credit profile in and see which lenders are going to offer the best rate for your credit profile. And really the advantageous part there is they know that I'm a mortgage broker, and they know that they have to fight for that. Right. So oftentimes I've heard with Edge, I work for Edge Home Finance. They're the largest mortgage brokerage in the United States. They're and growing. We have over 1,000 mortgage brokers with Edge now. The reality of it is because Edge is so big, I've actually heard that we as loan officers with Edge get better rates than some of the banks that have their own loan officer. Wow. So they'll prioritize giving Edge a better edge, or more so than their own loan officers.
Wow.
And then the other thing with that is mortgage brokers also have access to what's called wholesale lenders. So a consumer can't go straight to a lender like United Wholesale Mortgage. But they're the largest mortgage company in the United States. So I think over 10% of the loans in 2022 went through UWM.
Okay.
But they only work with mortgage brokers. So they have incredible rates. They have an incredible client experience. But you can't access them if you're just a consumer. You have to work with a mortgage broker.
Okay. Yeah. That makes sense. Mm-hmm. When I explain it to my clients, I think the biggest thing that I hit on is like, you're going to get a lot of like information and marketing from like Veterans United and Veterans Mortgage Source and like all these companies that are like, you're a veteran, we help veterans, but they also are going to cost you more in the long run because somebody's paying for all the overhead of all of that marketing, like the brick and mortar locations. I mean, that's a factor too, I would think. Mm-hmm. A company like Edge or, like more independent mortgage brokers.
Well, and let me caveat on that. So from my perspective, direct lenders oftentimes pitch it as, hey, we're the ones providing the loan so we can lower your costs. And it just simply isn't true.
Right.
Oftentimes the costs are higher because they're not selling the loan on the secondary market. And even if they are, what we've seen, again, you're comparing one option to 80 different options.
Right.
So, there are certain individuals that, might choose to go with that. But the reality of it is the client experience is going to be better with a mortgage broker. The rate is going to be better with a mortgage broker. It's definitely the right choice. And that's something we learned, right? Our first purchase was with a credit union, local credit union. We just went down to the bank. Hey, let's figure it out. Yeah. But every purchase since then has been with a mortgage broker. Mm-hmm. And it's the best way to get competitive rates.
Yeah. Yeah. How do you get qualified for the VA loan, mm-hmm. and how can you tell if you have access to the VA loan, and like what are the nuances there?
So if you're a service member, active duty, you most likely have your certificate of eligibility. And I make it easy for people. If they do the loan application, I'm able to pull the certificate of eligibility on their behalf. So I can go to the VA, pull it, and provide that to you and tell you what the actual certificate is. But again, if you've been active duty for even a bit of time, or if you've served in the National Guard or Reserves for 6 years, you'll be able to see if you have a VA certificate of eligibility. But I'll assist with that. And people can just go to my Instagram or hit me up. Even if you don't want to do a full loan application, I can provide the VA certificate of eligibility for you.
And his Instagram is Hawaii Mortgage Broker.
At Hawaii Mortgage Broker.
Super
That's right.
Easy.
Yes.
Okay. So if you've been in the military, if you're a veteran, you have service, you don't have to retire from the military to have access to the VA loan.
That is correct.
Yeah.
Yeah.
And I know that there's like guidelines or like requirements for debt to income ratio for most loans, credit score requirements.
Yeah.
How do those differ from like a conventional loan?
Yeah. So the VA wins on literally all fronts, which, it makes sense because the VA loan, we talked about how lucrative of an investment tool it can be. Mm-hmm. When compared to conventional loans, it's a win in all categories. So we talked about risk, about lenders, higher rates if it's higher risk, right? You actually, because the VA loan is the least foreclosed on loan, out of all the loan options out there. The VA loan with 0 money down is going to have a lower interest rate than a conventional loan with 20% down. And that's a phenomenal piece because most times if you don't have access to the VA loan, if you're doing a lower down payment on a conventional loan, like 5%, you're going to get hit with PMI and you're going to get hit with a higher rate.
What's PMI?
Private mortgage insurance. So it's basically when you don't have a lot of equity in the home, like a big down payment, the lender is going to look at that and say, hey, your likelihood of foreclosing on this is higher. Because if you have 50% equity in your home, you're not going to foreclose on it. You're going to sell it.
Right.
Because you'll just make that money. But if you get foreclosed on with 50% equity in your house, you lose that equity. You don't get that money. So the higher the down payment, the lower likelihood that you'll foreclose.
Right.
So with a low down payment, a small down payment, you actually have what's called private mortgage insurance. It's a little bit of a monthly fee in order to provide insurance for the lenders to be able to take on that loan, even though the risk is a little bit higher.
Okay.
The VA loan doesn't have PMI.
Okay. So I understand that you have access to lower interest rates with the VA loan, which is super cool because it's still 0 money down.
Yeah.
You don't have to have a conventional size down payment.
Correct.
What are the other benefits of the VA loan?
So the number one thing too, well, I guess the number two thing is flexible credit guidelines. So with a conventional loan, you need a high credit score or you pay for it, right? You pay in the rate or you pay. With the VA loan, you can have a lower credit score and they'll still take on the loan. And that you still might have to pay more, but
you will have a slightly higher rate.
Slightly higher rate for a poor credit score. But there's like, if you don't have a certain credit score, you're not going to be able to qualify for a conventional loan. Really, we can get you in a VA loan with almost any credit score. We can work to either repair your credit to get to the point where we need to be, or you'll already qualify. Most people who say they have poor credit scores qualify no problem for the VA loan.
Yeah. I've noticed that too. Cause I usually our clients, at least that we have jointly, I have a call with them and we chat and they talk about getting pre-approved. I'm like, okay, you should, talk to a lender, talk to Jack, scout out your options. And they are always so like, but, I have credit card debt. And I'm like, just listen, don't worry about that. Cause if you don't get past that fear and you just go to find out where you are actually situated. First of all, like you said, most of the time people are better off than they think.
Right. And
then it's so exciting when they're like, oh my God, I really can buy a house, because you just hear, again, a lot of doomsday worrisome stuff. But I also know that one of the best ways to improve your credit score is to make mortgage payments. That's a huge advantage to boosting up your credit score. So even if you guys want to buy a house and you're at a higher interest rate than you want, you can always refinance out of that. And we'll talk into refinancing later, but once you eventually get your credit score up that you qualify for a lower rate, that's always an option. Yeah. But I think goal number one is to just figure out how you can get to a place where you can purchase a house, and likely you're already there if you have access to the VA loan. Yeah.
And I love what you said. So if you're buying a house with a less than perfect credit score, it might be say a 0.25% higher. Well, if rates go down by 1% and your credit score goes up, now when you refinance, you get that 1% cut. And then you also get the quarter that was added because you had a less than perfect credit score.
Wait, run that by me again. That's confusing.
So say you qualify for a 7.5% rate, and then overall the market goes down to 6.5%. But you have a better credit score. Now, instead of 6.5, you might be at 6.25 or 6.
Oh, okay.
So you're benefiting from the market going down,
right?
But you're also benefiting from your credit score going up. You get even lower rate when you go to refinance.
And what a rewarding feeling that would be to get a call from you or whatever, hey, your credit score is way better. Rates have gone down, and we can actually drop it 0.25% more because you guys have been crushing it.
Exactly.
It's
very rewarding coming from a phone call from me. Everybody else is also going to be hitting you up. Everybody and their mother is going to say, refinance, refinance.
Yes, we are. No, we're going to, because I know that in the next couple of years, we're going to be in a refinancing situation. So I definitely want to do more on that in a minute. But I also wanted to go into with the VA loan. you said that with a conventional loan, you have to pay PMI.
Mm-hmm.
But with a VA loan, you don't have to pay PMI. But what I find when I talk to a lot of people about the VA loan, because I usually give them like the upfront, like general overview of the VA loan, because I'm usually the first point of contact talking to military families headed here.
And for anybody who's listening, like oftentimes the realtor is on the front lines, but they constantly get asked lender questions.
Yes.
Like
and
the first questions are lender
I know
questions.
almost all the answers
yes, you do.
because I'm married to a lender
yes,
and I listen
do.
to all of your conversations while we're in Napa. No, but there is like a fee for the VA loan that is not PMI. You're not paying it monthly, but it's rolled into the loan, but it is still a huge advantage to have that over PMI. So can you kind of explain, I guess, in relation to PMI, what the funding fee is?
Yeah. So the funding fee is, there's a couple different tiers of funding fee that you could fall into. First, I'll talk what the funding fee actually is. So the funding fee goes straight to the Department of Veterans Affairs. It helps pay for and make sure that the VA loan is a thing and can continue. So the funding fee goes straight to them, doesn't go to the lender, doesn't go to me, doesn't go to the title company. It goes straight to the Veterans Affairs, the Department of Veterans Affairs. And what they, that number of what the funding fee is actually changes based on the program continuing. So recently it actually went down.
Oh, is that why it changes?
Mm-hmm.
Huh.
Yeah. So, eventually maybe the program will be self-sustaining and maybe it'll go away. I don't know. I'm not in the government. So, but that'll be a plug. Maybe the government can get that done. But I think with the VA funding fee, it does help fund the loans and make sure that the program can continue. So with that, people fall into multiple categories. You're either exempt from the funding fee, and I'll talk that piece. You are first-time use or you're subsequent use. Okay, so if you're exempt from the funding fee, while you're still active duty, there's really two ways you can be exempt from the funding fee. I've seen most people who are exempt while active duty either have a Purple Heart or they've had a break in service where they qualified for VA eligibility, VA disability during their break in service, and then they came back in. So as long as you don't have to be receiving disability, but you have to have a VA disability rating
of 10% or more.
10% or more. Yep, exactly. So if you got out and then got a rating and then got back in and you're no longer receiving disability, but you still have that rating, you will be exempt from the VA funding fee. And that shows up right on your certificate of eligibility. So we can provide that information for you. If you're exempt, we know that right off the bat.
Okay. So some people, and a lot of like once you retire or get out, that's when you normally get your rating.
Right.
So then generally speaking, if you are out of the military, you probably are
only
exempt.
4% of people who get out of the military do not have a disability rating of 10% or higher.
No way.
Including my dad.
Okay. Well, I think you should do it based on like time frame because back in the 70s, right?
Oh, yeah.
Like
70s Marine, probably had, how many M4, ranges did he do with no ear pro?
Right.
Guy can't hear anything, but
literally love you, Tom, but no.
Right. But back in the day, you didn't bring those things up.
But that's a good thing to bring up though, because your dad probably will never do it, but you can retroactively apply for disability, which then if you bought a home and you paid the funding fee and then you realize you should have been exempt at the time, you can get that refunded to you, right? You
can't. Yeah. There's some intricacies. So if you initiate the process, that's most of the time the date that you initiate is your date. So if you have a loan after that date, sometimes people might be able to retroactively get their date of their disability pushed all the way back to their time.
So you can't really do it like that.
No, you can't. It's just not a set in stone thing.
Can you imagine how hard that would be? Like, it's hard enough just to separate from the military trying to get
right. I think the short example would be if somebody had an injury that led to a chronic illness or something or some chronic thing that they were dealing with, that VA could backdate that and actually pay you disability throughout the whole time. But, most people, when you try to get VA disability, the date of your application being submitted is the date that they quote started.
I see. Okay. Yeah. That makes sense.
Yeah.
I am shocked though that only 4% of veterans
that's
don't
what
have.
I read. Yeah.
Oh, that's crazy. Okay, so the first camp that you can fall into with the VA funding fee is that you are exempt.
Yeah.
That's like probably the smallest group of people that I talk to, because most people I'm talking to are active duty.
Mm-hmm.
So then the other two situations are, it's your very first time using the VA loan, or you've used your VA loan in the past, which myth number one, you can only use your VA loan once, is not true. You can use it over and over and over and over again.
And possibly twice at the same time. Two houses.
Yes. Exactly.
We'll hit that up.
So what is the VA funding fee if you're first time use? And what is the VA funding fee if you're subsequent use?
Yeah. So for the first time and subsequent use, the thing that matters is whether you're putting 0%, 5%, or 10% down. So with first time use, if you're putting 0% down, your funding fee will be 2.15% of the purchase price of whatever you're actually borrowing, the loan amount. Mm-hmm. Okay. So 2.15%. If you put 5% down, that funding, well, actually, let's talk about subsequent for 0% down. So compared to 2.15% for first time use, if your subsequent use, where you've bought a house and sold it and basically, put your certificate of eligibility back to the full limit, your funding fee will be 3.3%. So it is higher the next time you use the VA loan. But the 3.3% compared to the 2.15%, that's what it would be if you're putting 0% down on your home purchase here.
Okay.
Now, try not to get confusing with this, but the table goes, if you put 5% down, now it's the same. So 5% or 10% down payment, now it's going to be the same whether you're first time or subsequent use. And that is, it drops all the way to 1.5% for 5% down, and it's 1.25% for 10% down. So the key takeaway there is, most people, we say, if they're first time use, it's not really worth, like, the bang for your buck isn't worth it to put money down. But if you're subsequent use, you can really drastically lower that funding fee if you put 5% down.
Because if you look at it like on a linear timeline, which is how I look at it, so you're adding that money to your loan. You don't pay it like upfront. It's not part of your closing costs. It's rolled into your mortgage. So technically, if you're doing a zero money down VA loan, you're financing more than the purchase price of your home.
Yes.
You are a little math wizard. So let's say someone's buying a $500,000 home and they have a first time use funding fee. How much money does that add to the loan?
Yeah. So the 2.15% funding fee would be just over $10,000 on a $500,000
so
home.
You're like actually financing like $510,000-ish.
Correct.
So when you think about paying down your mortgage payment, you're really paying off that funding fee first. Mm-hmm. You're not really dipping into like building equity or paying down your loan.
Right.
So that's why if you have the ability to put money down and lower the funding fee, because the funding fee is money you're not getting back. Mm-hmm. If you're paying down your loan and then you sell your house, you're getting a lot of that money back. So that's why if you can put money down to lower the funding fee, I always think that's worth it. But you and I, when we've bought homes in the past, we've been like, should we put money down or could we put that in something else? And I know a lot of times you have conversations with clients about that too. Like, where are you going to get the best bang for your buck?
Yeah. I mean, our discussion is always, if it's not something you're investing, like if it's just in an account, then put it towards the down payment. It's good peace of mind. You have great equity in the house now right off the bat. Mm-hmm. And if you're subsequent use specifically, you're saving 1.8% on the loan. Right.
Which is huge. I think that's a ton of money, especially on a Hawaii size loan.
Yes. And the way the math breaks down is it's a 36% return on that investment.
Right.
So you're putting that money into equity and you're literally instantly saving 36% on the money that you're putting down. So unless you're putting, in an investment that's more than 36%, it's definitely worth it to think about doing that. Lowers your monthly payment. There's a lot of benefits.
Yeah. Speaking of the Hawaii size loan, so this is sort of like myth number 2. Mm-hmm. Can I go buy a $5 million house on my VA loan with zero money down?
So that is a little high, right? The VA does not have a limit on a single property when you use your VA loan. So the VA loan will guarantee however much loan limit you want. Now, having said that, some lenders have their own limits.
Okay.
But
the
VA loan is
has no limit.
as much as you'd like for if you only are purchasing one home. That's correct.
Okay.
So, and that limit for the lenders is generally kind of between 3 and 5 million.
And that VA loan cap is what it's called, went away, I think, in the last couple of years.
For the first, yeah, exactly. Yeah. Now the cap still applies if you currently own a home with your VA loan and you're trying to buy a second property on the same loan certificate of eligibility.
Okay. So I have a lot of clients like this who are coming from the mainland and they bought a home in 2020 and
they're the smartest people in the world and they're keeping it and renting it out.
Yes, at Fort Campbell, right? Or wherever you know, home prices are maybe like $200,000 to $280,000.
Sure.
And they're coming here and they're like, like we understand the benefits of buying. We'd love to buy in Hawaii, but we already own a home on our VA loan, so there's no way that's going to happen.
Mm-hmm. And that's not true.
It's not true.
With Hawaii specifically, so the VA loan limits on a second house under the same VA loan entitlement they're different for every county, but the Hawaii, like in Hawaii, they're the higher cost of living, the higher cost areas considering from the VA, right? So the limit is actually higher in this county. So you're looking at $1,080,000. Let's see.
I think it's $1,089,000, right?
$1,089,000.
Look at me.
And some change. I think it's 200 on top of that.
So,
but if you bought a $280,000 house, then that leaves $800,000 left over on your VA entitlement that they'll still do the guarantee for, and you can still get a 0% down payment on an $800,000 house if that was the case where you had a $280,000 house in Kentucky or whatever.
Right. So you can have more than one home on your VA loan.
You can.
And you also can have more than one home on your VA loan even if you go over that cap. So let's say you were coming to buy a home here, you own a home in Kentucky. I always want to say Tennessee with Fort Campbell. I don't know why. Well, I mean, I know why, but, and it goes over the cap by like $100,000. Mm-hmm. What do you do there?
So there's different requirements, but the VA actually covers 25% is their guarantee. So that's really where you're going to come in. You're going to come in with a 25% down payment on the difference. And that's going to provide the gap there.
But see, like you have options. You don't have to cut yourself off from a possible another incredible investment. And
I think that's the benefit of speaking with me. Even if you think you're out of the game for whatever reason, there's always ways to do it. There's always like low down payment ways. So even if you don't have a VA loan or you know that you bought a, $2 million quadplex in Texas and you don't think you have any possibility of buying a house here in Hawaii, we can definitely find a way to do that. And some of those things is like, okay, when you're leaving your current home in whatever state you're in and you're moving to the next place and turning that into a rental, because it was your primary residence and you're turning it into a rental, we can use 100% of that income to offset the mortgage. So some people come to me and say, well, we've got this mortgage, even though we're getting rent, this lender A told me that I can't use that income from the rent to offset my debt to income ratio, that we can oftentimes use 100% of it to offset. Yeah.
These are the things I wish I could we are blasting them to the masses.
Yes.
But like I have these same conversations over and over, and it's always so fun to see people's like minds light up. Like, oh, okay, I didn't know that.
Right.
So I think those are all of like my big questions about like the VA loan that I think most people I talk to at least have questions about. The one thing I really definitely wanted to get in here before we like wrap this up is refinancing. Mm-hmm. So like 2 lines of thought here. Like, first of all, why would I refinance? How do I refinance? How do I know if I'm getting scammed refinancing? Because that's absolutely a thing. And, for everyone that bought in the last couple of years that have the higher interest rates, from the years previous, they're in the 2-1 buy down and they're just like waiting for rates to drop. What's like if you were like going to do a sound bite, like what is the advice you would give them? Like rates drop tomorrow, they want to refinance. Like what do they do?
Yeah, I mean, so the first thing is we already have a lot of your information, right? So we can streamline it and get it done really quickly. What I'd like to have people know about the VA interest rate reduction refinance loan is the VA IRRRL. It's streamlined in that you don't have to pay the same sort of closing costs that you did when you were purchasing the home, because we have a lot lower title fees, a lot, you're not transferring the title into your name. There's a lot of things that actually benefit you as far as closing costs when you are refinancing. There is a small funding fee associated with the refinance, but all those funding fees we talk about this for the refinance, it's 0.5%. Okay. So much, much lower. And the costs of refinancing oftentimes can be covered by the lender. So depending on which rate we choose, we can get lender credits associated with that rate that oftentimes can pay for the closing costs. And that's the big thing, I think, with when you talk about like a scam of like who, we've heard people, when we first got here, when people were refinancing as the rates were going down, they went to sell their house and they realized that all of the closing costs associated with their rate were with the refinances were rolled back into the loan amount.
So they thought they were doing a zero cost refinance because they weren't coming out of pocket at like the closing of the refinance, but the lender rolled them all into the
loan amount, right?
Which is a sneaky thing to do. Yep. And also, I mean, it could have been disclosed in some scenarios, maybe not, but the important thing is that hurts you in the long run selling, because all that equity you've built, all the the mortgage payments you've made, paying down that loan, it resets. If you just continue to add money back into the loan, it doesn't matter really if your rate's lower, if you're not holding on to it long term.
Right. And that's not to say that is always a bad choice.
Right.
That is a choice though. Yeah. And many people that we talked to didn't realize they had an option, right, and weren't aware that their loan limit was going up, which, like, of course you're aware, you see it on the paper when you're signing, but that's what we do to try to, like, hey, we are going to explain your options, because in the end, you guys are the decision makers, right? Like, you guys are the ones that are paying the monthly payment and actually being, having to face that loan amount at the end when you go to sell. We want to make sure that the decision is yours and you're fully informed. So.
Yeah. And everything that's going on, because there's a lot that goes into buying a home and refinancing. So I understand you can't memorize all of it, especially if it's your first time. Right. But we at least feel like it's really important to look you in the eye and be like, okay, did you get that? Let's not move forward until we know you got that step.
And there's certain things that I talk through and I think people get. And then there's certain things that I generally hit 3 or 4 times to make sure, hey, this is something that you're going to look back at in 3 years and either remember or not remember that we talked about it. And I want to make sure that you knew this was part of the decision of refinancing or purchasing a home.
That was the realtor equivalent of that. If any real estate agents are listening, that was explaining appraisal clauses in 2021 and 2022. Right. It was all we did. Yes. So, and then obviously you can refinance into a lower rate, and you can do it in a way that's just basically 100% beneficial to you. Okay. Let's say we own a home here and we want to keep it, but our home here was $800,000 because we bought a single family home, and I'm PCSing to the mainland and my rate's super, super low. And I want to free up my VA loan entitlement for the mainland, because on the mainland where I'm moving, the cap is $800,000. So I don't have any entitlement left. I'm at the cap. Would it be smart? Well, can I, number one, and number two, would it be smart to refinance out of my VA loan to free up my entitlement to buy my next home? Yes.
And we did that.
Well, yes and no. Yes, you can.
Yes, you can.
Okay.
The answer is you can. And I've obviously, my answer to this. I think it really depends on the situation of whether it's a good idea or not. That low interest rate is incredibly lucrative, right? So you have that low interest rate on arguably what is going to be the most expensive home you buy, unless you're moving to another high cost area. It's basically free money. When you look at, down the road, even if you're not, breaking even today, that rate is going to outlast any sort of where the rents are right now. So if 5 years from now, you look at your rate compared to what any other investor is going to have as far as what their rate is, that's going to far outweigh the benefit or the cost of whatever current, like your rate is going to be when you go to purchase your next home. So to close that out, yes, you can refinance into an investor loan. Investor loans are even higher than normal conventional loans because they're not your primary residence, so they're higher risk. So you're going to get today's interest rates, and then you're going to get even higher than that because it's an investor loan. So you're going from a 2.75% rate to like an 8-9% rate. It's definitely not worth it to do it at that point because now your payments are going to far outweigh your ability to rent it out. And even that, like say you're selling your $800,000 house here or you're refinancing it, that next house, if it's $300,000, okay, now you get an 8% rate on that or a 6% rate on that if rates go down. Like that's still way higher than your 2.5%. So
now
rate.
You have a higher rate on both properties, right? Or like a high rate on both properties.
So the way forward, I think, and what we would generally recommend to people is don't refinance. You're allowed to keep your loan, your VA loan on the property that it's on and turn it into a rental. There's no issues with that. You don't have to turn it into an investor property rental or an investor loan. Keep it on this property. And if you have the cash to be able to do a conventional loan for your next purchase, great. If not, if you are completely maxed out, tapped, you don't have the ability to purchase at your next duty station, as much as we believe in buying and trying to make that happen, selling your previous home and in order to purchase your next one, just to then sell it 2 years later and continue on. My recommendation would be use that 2 years at that next duty station to save and to come up with the down payment on a conventional loan, and then your subsequent duty station, then hit it with a conventional loan. Keep your VA loan on the most expensive property you own. Yes. Especially with the rate that you most likely have right now.
Yes.
It's unheard of.
That is what it is a lot to hear you ever tell somebody that they should rent ever.
Right.
And so the fact that is how strongly I know you believe in keeping your property here.
Right.
If you can.
Right. And I'll tell you, I mean, there's people, we've heard in the past, it's like, okay, well, Hawaii's not a good rental market because it's not a cash flow market. And it's like, the reality of it is cash flow is phenomenal, but cash flow, even in predominantly cash flowing markets or markets that are just known for their cash flow is not occurring right now. No investors are getting cash flow, and it's really changing the investment game. But guess what? Hawaii's never claimed to be a cash flow market. Right. It has solely been in the camp of appreciation. So people who invest in here are just waiting for 5-10 years down the road. So when the property a decade later, you might have broken even, which is great. The tenant paid your mortgage, but then 10 years down the road, your property is worth $300,000, $400,000 more than you paid for it. And now the appreciation market is what made it a good investment. Yeah,
you have to be thinking, you have to think more long-term than where you're going to live at your next duty station.
Yeah.
That is.
And there's nothing against cash flow. I mean, I'm a huge fan of cash flow and analyzing properties, and the whole thing was like get $100 a door and just try to repeat that and get cash flow and coming in and making sense. But it's kind of known as like the next step up of like if you're investing for appreciation, it's like a level above cash flow. Yeah. Right. Because it has the potential to be big time money.
Yeah.
So.
Awesome.
Yeah. That's the VA loan.
Is there anything else you can think of to tell people? Oh, I mean, how easy is it to how do you even like get pre-approved? That's like the biggest thing. If I'm like, okay, great. I just heard this podcast. I'm definitely going to look into my options and possibly buying a house. How do I get pre-approved for the VA loan?
Yeah, so you can Google my name, Jack Williams, Edge Home Finance. If you Google that, it'll take you right to my landing page at Edge Home Finance. You can also follow me on Instagram, as we mentioned, at Hawaii Mortgage Broker. My link to my application page is on my Instagram, so it's very easy there. Generally speaking, I feel like I broke my record the other day when we had a call on a Saturday when we were in Napa. And within a half hour of the call, they had submitted their application. It took them 10 minutes to do the application. And then like 30 minutes later, they were pre-approved and they submitted an offer. So
that really was so fast.
It was, I think, yeah, for sure within 48 hours, maybe within 24 hours, they're still going back and forth on whether they got a counter.
Oh.
So it'll be, within literally a couple days of just meeting us, they are going to get probably an offer accepted.
And this is just a reminder to all of my clients. So obviously all of you clients that live here in Hawaii, and you own homes already, this particular person we're talking about was a past client of mine. It was her sister that's just buying a home in Michigan.
Yep.
So Jack can help with loans in all 50 states and not just VA loans, conventional loans, because they're a conventional loan, right? Or
they are conventional.
Yeah. All kinds of loans. So reach out with questions anywhere about anything. Like we can absolutely help you out.
Yeah.
So.
Yeah. I mean, I predominantly VA because of who we work with and where we work, but I've worked, we've done conventional loans, we've done FHA loans. So definitely know how to help.
You did an FHA loan?
I did.
Oh yeah.
Yeah.
Man, I'm just like, I swim in the VA like pool,
right.
like exclusively. Yeah. So
we actually almost did a USDA loan too, because we had a client that worked for the USDA.
Oh yeah. Yeah. I should see how they're doing.
There you go.
Okay. I mean, that's like very all-encompassing about the VA loan, and all of that information that we said applies again to VA loans all over the U.S. It's not Hawaii specific necessarily.
Right.
And yeah, you know how to find us if you have any questions.
All right.
We did it.
See you next time.
Bye.